Hello students, we are going to start a new chapter, that is chapter number 9, and we are on the second last chapter of our syllabus. The topic is money market and capital market in India. What does money market and capital market in India we are going to see in detail in this chapter. Before starting, let you all tell me what is market. Market is a place where buying and selling takes place. So we are going to study the market of what? About the money and the capital market. Now let's discuss the market, the money market or capital market. It is talking about the finance. So let us discuss the meaning and types of finance. Finance. Finance is the broad term that describes two related activities. It is the broader term that describes two related activities, the study of how money is managed and the actual process of acquiring the needs of fund. That means, friends, the finance describes about the two activities, that is how money is managed, and the next one is how the money is acquired for the needs of fund, how the money is been made for making a fund. Now, an individual, though it is an individual, business, government sector, or all needs fund for operating its day-to-day activities. In the field is often separated into two subcategories, that is public finance, corporate finance, and public personal finance. Now, friends, the finance is the very important term which describes about how money is managed and how we acquire that money for the need of fund. Without the finance, the business operation or personal operation or public operation cannot run smoothly. As individual business or government entity all needs fund for making their day-to-day activities smooth. Now, the finance is categorized into three heads: public, personal, and corporate finance. We will discuss about what is personal, what is corporate, and what is public finance. Let's see the history of finance. If we trace the origin of finance, the evidence to prove that it is an old human life on earth. Like the word finance is old as a human life on earth. The word finance was originated by the French word, and in 18th century the English speaking communities termed the management of money. Finance has the management of money. In 18th century, the people who used to speak English, like they term this as the management of money. The first statement I have said that the finance is as old as the human on the earth, and the word was originated from the French word, and in 18th century the people who used to speak English those communities term the management of money. Since then, we found the permanent place in the English dictionary that the word is finance. Now, in today, finance is not merely the word else, has emerged into an academic discipline, a greater significance. Finance is now an organized branch of economics. Now, without finance, the word finance plays a very important role in an economy, in our day-to-day activity, in everything. So, now the word finance plays a very important role in our life, in our economy, in our personal life. Let's discuss the different categories of finance or the types of finance. The very first one is personal finance. The very first one is personal finance. What is personal finance? Friends, personal finance means a finance for an individual or for a particular person. For example, when we are talking about the personal finance, when your dad gives a money of 10,000 rupees to your mom to handle that budget of the entire family, to look for the grocery, to look for the your fees, the servants working in your home. So all those comes under the personal finance. Then we will see towards the corporate finance. Corporate finance means the finance for the corporate activities, for the decisions to be taken, for running a business to be smooth. So those are the corporate activities. We will see this in more detail. Then we will look towards the public finance. The public finance, in the previous chapter itself, we have done about the public expenditure, public revenue, public debt. So all those things comes under what? It comes under the public finance. When we are talking about the government, so that government finance, so we are talking about the public finance. Now let's discuss the personal finance in detail. What does personal finance means? Personal finance is an application of principal finance to the monitoring the discipline of an individual or family unit. As I have told you, I have given you an example, like if your parents are earning 20,000 rupees a month and they have to finance each and everything properly, so that their monthly routine or the daily routine for that entire month gets smooth without any shortage of money. So the personal finance in the application of principle of finance to the monetary decisions of individual or family unit. That means your parents would decide that the money, that the finance, where which is the priority and which should be paid afterwards. It addresses the way in which individuals or families obtain a budget, save spending money over a time, taking into account of various financial risks and future life event. Friends, this means, as I have told you, when your parents, when your one of your parent is earning 20,000 rupees, for example, so he will see whether it should be paid for your how much should be given to you as a pocket money, how much should be paid, how much part of the salary should be paid to the your fee structure, for the grocery, for the vegetable, for other expense, for the petrol. So, and how much has to be saved out of that amount, and how much financial risk has to be taken, and how much should be saved for the future life event. So this all comes under the personal finance. Then it is corporate finance. What is corporate finance? The word corporate finance is an activity related to running a corporation. It is an activity relating to the running a business, you can say. In simple word, a division and department that oversees the financial activities of company. Corporate finance is primarily concerned with maximizing the shareholders' value in long term and the short term finance planning and implementation of strategies. For example, we can say a business who is having its shareholder, so it has to see that primary concern with maximizing the shareholders long term and short term financial planning for implementing of the various strategy. For everything from the capital investment decision to the investment of banking falls under the domain of the corporate finance. This means whatever, whether it is a capital investment or whether it is a decision for the banking, it falls under the corporate finance. Now we will talk about the public finance. In the previous chapter itself, we have discussed about the public finance in detail. The public finance is a study of an income and expenditure of government. Here it is mentioned state, but I would say it is the income and expenditure of government, how government will generate revenue, how it will spend, in what activities, and how the collection of money should be done, how the branches of allocation between the various state activities which are regarding to the essential duties or the funds or the functions of the government or the state. So this is public finance. Friends, let me tell you, whether it is corporate finance, whether it is personal finance, whether it is the public finance, finance is the backbone of an economy. Finance basically refers to the management of money and the fund needed for an individual. The money can be needed for the individual, it can be needed by government, it can be needed by the for the purpose of business houses. Thus, finance categorized into three sectors that we have seen, three structures that we have seen: public, personal, and corporate finance. Now, the public finance can be divided into three parts: public expenditure, public revenue, and public debts. So as I have told you, like, the finance is a backbone of an economy and which plays a very important role in everyone's life in day-to-day activities, whether it is personal, corporate, or public. And it plays a vital and important role. So let's discuss the Indian financial system. The financial system of country is responsible for mobilizing and allocation of resource. What does mobilizing and allocation of resource means, friends? Mobilizing means to mobilize the resource in such a way, and allocation of funds means to allocate, how to do, where to do, from what the fund should be generated, how it should be utilized, how to raise money, how all this comes under mobilizing and allocation of resource. Because friends, resources are very limited, but allocating them in such a way that no resource should be wasted, it should be utilized in optimum way, it should be utilized in the best way. So the financial system is the country is responsible for what? It is responsible for mobilizing and allocation of funds. It is responsible for mobilizing and allocation of funds. It helps in creation of wealth, which is the vital economic development of country. If the resources, if the financial resources are properly optimum allocated and mobilized in the best way, it automatically there would be an economic development. If there is an economic development, it will help to increase in GDP, which will play economic growth and development of country, and which is very important for our country India. So it helps in wealth, creation of wealth, and it helps in economic development of the country. When we are talking about the economic development, we are talking about the uh, schools, entrepreneurs, household, services, primary sector, secondary sector, tertiary sector. Everything comes under the economic development. Now, the financial system in our country, India, comprise of the following. Those are the financial service, the Indian financial system. The very first one is financial institution. The second one is financial market. When we are talking about the financial market, we are talking about a topic name, that is money market and capital market, friends. The third one is financial instrument. What are the instruments that plays in the financial market? And the last and the least one is the financial services. What are the financial services that are in the Indian financial system? So these are the four important financial system. The first one was institution, market, instrument, and services. All this comprise of Indian financial system. The first one was financial institution, the second one was financial market, third one was financial instruments, and the last and the least one was financial services. Now we will discuss about the meaning of the financial market. The financial market refers where purchase and sale of financial assets such as bond, stock, derivatives, government securities, foreign currencies, etc. is undertaken. Once again, financial market refers where buying and selling of the financial assets. What are financial assets? Bonds, shares, derivatives, government securities, foreign currency, etc. are undertaken. The financial market operates through the bank and non-banking financial institution, broker, mutual fund, discount houses, etc. How it is operated? It is operated by banks as well as non-banking, as well as the financial institution, broker, mutual fund, discounts, etc. Financial market includes two kinds of distinct market. Those are the money market and the capital market. Financial market is included in two distinct markets. Those are financial money market and capital market. So to here we are going to start with a topic that is money market and capital market in India. Hope so you have understood the basic knowledge about the finance, about the financial system in a country, and how the finance was originated, what was its history, how it's worked, what are the systems, what is its structure. Now the finance market comprised of two markets. Those are money market and capital market. Let's discuss about some of the financial instruments before starting with the money market and capital market, because as I have told you that financial market is where sale of shares, purchase and sale of shares, bonds, derivative, government securities, etc. takes place. So the what does bonds means? Bond refers to the debt issued by the company. It is a debt issued by whom? It is issued by the company or government as a means of borrowing or as a long-term funds. What does bonds mean? It is a debt. It is when the government or the company have the shortage of money, they will issue bonds for the public so that the public can they can issue bonds to them and public can give them money so that they can raise the fund from with the help of bond. It is the long-term means of fund. Same way, the equity shares. Equity shares means a company held by an individual or the group. It refers to the share of a company. It is the shares of the company who is held it, who is having those shares. It can be an individual or the group of people. And the shareholders are the owners of the company, friends. Then derivatives. Derivatives refers to the financial securities which derive its value from underlying such as bonds, stock, currencies, interest rates, commodities, etc. I have explained you the three instruments: bonds, equity shares, and derivatives. Now, what were the bonds? Bonds refers to an instrument issued by whom? Issued by the company or the government to the public for raising the long-term fund. Equity share are held by the individual or the group. Shares of the companies held by individual of the group, and whoever is having those shares are the owners of company. Derivatives refers to the financial securities which derives the value from underlying the assets such as bonds, stock, currencies, interest rate, etc. Then we will see the government securities. What are government securities, students? Government securities refers to an instrument issued by whom? It is issued by the government with a promise of repaying at the maturity. Government securities are issued by whom? It is issued by definitely by the government with the promise that they will pay the money to the public at its maturity. What does maturity means? Maturity means suppose I am depositing money for 1 year. When the 1 year gets completed, that particular day would be the maturity day. Then what is trade bill? Trade bill, a bills of exchange drawn and accepted by the trader in the payment of goods. Trade bill, it is a bills of exchange. It's an exchange that they are promising to pay so and so amount after to the so and so person after so and so date or so and so time period. So trade bill refers to the bills of exchange drawn on and accepted by the trader. It is drawn by the trader and accepted by him in the payment of goods. And the promissory note. Promissory note is the financial instrument that contained by one person to the other person for paying the such money and entities to a specified future date. After the financial instruments, we are going to discuss about money market. The money market, how does the money market form and how they are working in an Indian economy. Indian market system, that is money market. Money market is a market where lending and borrowing of short-term funds. Money market is a market for lending and borrowing of short-term funds. It is a market near money, that is short-term instruments such as trade bill, government security, promissory note. Now only I have explained you what are the financial instrument. Bonds, derivative, government security, promissory note, trade bill. These all are near money, and how this near money takes place, how they are working with the help of money market, we are going to learn this. So money market is a market where lending and borrowing of short term funds, it is a market near money, that is short term instrument such as bill, government security, promissory note takes place. Such instruments are highly liquid, less risk, easy marketable, with maturity period of 1 year or less than 1 year. Once again, money market is a market which is working with the term of near money, and it is a short term instrument, and it is those bills, promissory note, trade bills, government securities, derivatives, all these are highly liquid instruments which can easily converted into money, which can easily converted into a marketable money with the period of 1 year or less than 1 year. Now we will discuss some of the structure of money market in India. The money market is dichotomous by nature. What does dichotomous means? It means it has two different sides. It is like one is an organized sector as well as unorganized sector. Now we will discuss about what does organized sector and unorganized sector means. The organized sector means where everything are properly organized, where employees are properly fixed, its payment, its duty, everything is fixed. But in unorganized sector, it is all of its opposite of an organized sector. The organized sector includes Reserve Bank, Commercial Bank, Cooperative Bank, Development Financial Institution, Investment Institution, Discount Finance Houses of India. All this all comes under the organized sector. So what are organized sector? It includes Reserve Bank of India, Commercial Bank, Cooperative Bank, Development Financial Institution, Investment Institution, Discount and Finance House of India. Unorganized sectors are ingenious bank, money lender, unregulated non-banking financial instruments. Money market center in India are located in Mumbai, Delhi and Kolkata. So what is money market? Money market is an dichotomous by nature. Dichotomous, we can say, it has two sides, two effects. It compare both it compare about the organized and unorganized sector. The sector include organized sector include the RBI, commercial bank, cooperative bank, investment institutions. Those are organized sector. Unorganized sector comprise of indigenous bank, money lenders, unregulated banking, financial intermediates, etc. Money market center in India are located at Mumbai, Delhi, and Kolkata. However, Mumbai is the only active money market center in India, money flowing in form of all the parts of country. Let's have an introduction. There are two types of financial market: money market, capital market. Money market is the part of financial market which deals in borrowing, lending, short-term loans, generally for the period of less than and equal to 365 days, that is 1 year, or less than 1 year. As I have already discussed about the money market, there are two types of financial market. Those are money market and capital market. Money market, it deals with near money and which is highly liquid and marketable, convertible into money in less than 1 year or on the maturity of 1 year. That is 365 days, friends. It is mechanism to clear short-term monetary transaction in economy. Money market is nothing but it is a mechanism to clear short-term monetary transaction in economy. Definition of money market. According to the Crowther, the money market is a name given to the various firm and institution that deals in the various grades of near money. Once again, according to this economist, the money market is a name given to all the various firm and financial institution which deals with the various grades near money. It's easy. The definition, what is definition of money market? The money market is a name given to the various firm. It is given to the whom? It is given to the various firm institution that deals in the various grade near money. Let's have a small, before going into the about the organized and unorganized sector. Once again, finance is the backbone of an economy. It is very old structure. Has the human life, as long as human life exists, the word finance also exists. The word finance comes from the in 18th century. The Englishmen, the English speaking communities used word management of money, and after the 18th century, the word finance plays a very important role. It plays very important role in public finance, corporate finance, or it is a personal finance. We have discussed what is corporate finance, what is personal finance, and what is public finance. Then we have discussed about the financial instruments, the two financial markets, and its financial system in structure, financial system in India. The financial system are the financial institution, financial market, financial instruments, and financial security services. Then we have discussed about the financial market. There are two financial market, that is money market and capital market. When we are talking about money market, we are talking about the near money, whatever the short term funds which is near money. Those are bonds, securities, trade bill, promissory note, etc., which can easily be converted into liquid asset within the period of less than or equal to the 1 year, that is 365 days. And we have discussed about the money market is the name given to the various firm institution deals in the various grade of near money. Let's discuss what is organized and unorganized sector means. As I have told you, the organized sectors are RBI, commercial bank, cooperative houses, discount and finance housing system, in investment institutions. All those comes under the organized sector, and under the unorganized sector, those are like indigenous bank, non-banking financial institutions, all the money lenders. All this comes under the unorganized sector. So let's discuss what are the organized sector. Organized sectors covers those enterprises where the term of employment is regular. Once again, organized sector comes under, it covers all those organization where the term of employment is regular. And in unorganized sector is characterized by small and segregated units which are largely outside the control of the government. Unorganized sector are small and segregated units. Segregated means spread out units which are largely uncontrollable by the government. The next point is they are registered. The organized sectors, those are registered, and they follow the rules and regulation and the various laws such as factory acts, minimum wage act, payment of gratuity, shops establishment act. All this act, when the organized, the sectors which are following the all the rules and regulations, the different acts comes under the organized sector. But for the unorganized sector, they does not follow any rules, regulation, policy passed by the government. Once again, in the very first point, we have seen that in organized sector, it covers the enterprises where the term of employment is regular. In unorganized sector, they are characterized by small and segregated units where the government control is out of control. And in organized sector, it is registered by the government. They follow rules and regulation, various acts like minimum wage rate, factory act, establishment act. All those acts are followed by the organized sector. But for the unorganized sector, are not, they do not follow any kind of rules, they do not follow any kind of regulation by the government. In organized sector, workers in the organized sector are paid according to the prescribed scale. That means every institution in organized sector have its prescribed scale. Like for this post, this is the basic pay, this is the allowance, this are the perquisites that they are going to get, and this would be the total salary. And every year this amount, this percentage would increase after the promotion. But for unorganized sector, most of the jobs are low paid and often not regular. Once again, friends, the third point is in organized sector, workers in the organized sector are paid according to their prescribed scale, and they also get the payment on time and on the regular basis. The workers are paid according to the scale which is fixed by it, and they are paid properly on time on and regular basis. But for the unorganized sector, the jobs which they are offered are low paid, and the payment are also not regular. Then then the fourth point is they get annual increment. In the organized sector, they get increment, they get allowance, they get provident fund, they get gratuity, medical benefits, safe working condition, etc. For the organized sector, all the facilities which gives increment and fresh refreshment for an employees will be given. But in unorganized sector, there is no such provision of provident fund, pension, gratuity, time payment, and the holidays are also not even fixed for them. Leave dues to the sick, etc. are not fixed. Leaves on the due to sick and etc. are also not paid. And in organized sector, they can form trade union, but in unorganized sector they cannot form any kind of group, they cannot form any kind of union like trade union. So these are the difference between the organized sector and unorganized sectors. Hope so you are understanding what does organized sector means and what does unorganized sector means in the in the structure of money market. And organized sector, I have given you some example, and also for the unorganized sector. Let's see the some of the organized sector. The very first one is RBI. RBI means Reserve Bank of India. The next one is commercial bank. The RBI is the head of the commercial bank. And next one is cooperative banks. Then development financial institution. And the last one is discount and financial houses of India. This all comes under the organized sector, where in organized sector all rules and regulation are formed. The employed are getting day-to-day payments on the regular basis, and they are enjoying all refreshment, everything. Let's see some of the unorganized sector. Basically, there are the three unorganized sector: ingenious bank, money lenders, and unregulated and non-bank financial intermediaries. These are unorganized sector, friends. Let's let's discuss about the organized sector. People have secured work and term employment are regular. The organized sector of money market consists of RBI, commercial bank, cooperative bank, regular financial intermediaries, etc. Let us now discuss the organized sector of money market in India. RBI. The RBI, that is Reserve Bank of India. Every country in the world has central bank, which is the apex bank of the banking system. Every country have its own central bank, which is apex bank of banking system. For us, for our country, Reserve Bank of India is the apex bank and the central bank of our country. It is entrusted with the responsibilities and regulatory of the money market in the country. Means the RBI, that means central bank, and the apex bank, that is RBI, the Reserve Bank of India, has a responsibility to regulate the money market in our country. The Reserve Bank of India is the central bank of our country. The Reserve Bank of India was set up on the basis of recommendation of Hilton Young Commission. It was recommendation of whom? Of Hilton Young Commission. The Reserve Bank of India Act 1934 provides the statutory basis of functions of bank and commenced its operation on 1st April 1935. The statutory base function was Act of 1934 and operation started on 1935 as the private shareholders bank. RBI was nationalized on 1st January 1949 as Jan 1949 as the National Bank and Constitute of Money Market. So today, friends, we have discussed about the word finance, about the financial system of our country, and the financial market, that is money market and capital market. We have discussed about the money market. In money market, we have discussed about the organized and unorganized sector, and we have discussed what is organized sector, and we have started with the topic Reserve Bank of India. In the next lecture, we will continue about the Reserve Bank of India. Hope so you have understood the basic, what is money market, what are the how it works, what are the some of the organized and unorganized structures of the sectors of the money market. In the first, we have discussed finance. Finance is nothing but it is the backbone of a country, backbone of an economy. Finance basically refers to the management of money, and money is nothing but fund required by any of the institution. It can be public, personal, or corporate to run its day-to-day activities smoothly. And the system of country is responsible for mobilizing and allocation of resource. This money, the financial system, who is responsible? Financial system is responsible for allocation and mobilizing the resource. Then we have seen the Indian financial system, financial institution, financial market, financial instruments, financial services. Then we have discussed about the financial market, where financial market is the market where purchase and sales of securities, bonds, promissory notes, derivatives, government securities, etc. takes place. There are two types of financial market: money market and capital market. We have started with money market. Money market is the market where lending and borrowing of short-term funds is dealing with, which is easily liquidable within the period of 1 year or on the maturity date. Then I have explained you about some of the financial instruments like bonds, derivatives, promissory note, trade bill, the government securities, etc. Then we have discussed about the structure of money market in India. It is a dichotomous nature. It means it is divided into two parts. Those are money, organized sector and unorganized sector. Friends, I have told you what is difference between the organized sector and unorganized sector. Organized sector is the sector where everything is properly taking place, everything is organized. In unorganized sector is an opposite, where the payments, where the salaries are not paid regular basis. In unorganized sector, where no acts are followed, it is not controlled by government, because it is there are small units and it is saturated units which is out of control by the government. And then we have discussed about some of the organized sector like RBI, commercial bank, cooperative bank, development financial institution, discount and finance houses of India. And there are three unorganized sector like ingenious bank, money lenders, and unregulated and non-banking financial intermediaries. Then we have discussed about the RBI. Small request, you have to read page number 81 and 82 for after watching this video, so that you can understand it very well. Here we'll end with the today's session, that is money market. Then we will discuss about the organized sectors of money market and its functions in the next lecture. Thank you.